Kia ora tātou. Okay, yes. The punishment resumes. I'd like to, we're on item 10 for those of you who haven't got your way through things. And I'm going to welcome Phil and Ross and Gary. And I'm pleased to see that you've saved 42.1 million through getting a better deal with SAP. And there was a good update from Gary on the city centre in the agenda papers. And so please, can you three share some of the good news and excitement with us?
Certainly. Thank you, Your Worship. Kia ora koutou, talofa lava. I'll kick off as per normal, hand over to Ross to talk to the financials, and as the Mayor noted, Gary's here to give you an economic update, but actually more than that, to close the loop on earlier discussions and requests from you for some intel about what's happening in the city centre area. So we decided we would include that in this section of the agenda, and yeah, welcome to Gary when we come to that in due course. Few headlines from me, and I'm trying to not repeat too much that I had the opportunity to talk to you yesterday about in a different forum, but given we're in a public environment, a few things maybe to have on the record. That the changes to the structure in the organisation and leadership is now in place, and the work with the supporting work around that in terms of leadership change and the change priorities in the organisation are well underway. I'm not today going to talk too much about the service performance statistics. Suffice to say that we've continued the pattern of substantial year-on-year usage of our facilities, and customer satisfaction in general terms is about the same or slightly improved. There are no headache headlines in that realm. So the one area I was going to highlight today was resource consents and building consents, given how it's not only a key indicator of workload in that area in the organisation, but it also speaks to development patterns. June applications for resource consents were lower than May, dipping down from 1,459 in May down to 1,170. That level is still higher than any other month since December 2023. So it's if I had a graph, it would show a little bit of a dip, but in general terms, a reasonably stable and healthy level of resource consent applications coming through. Building consents follow a similar pathway, 1,490 in May, dropping to 1,265 in June. Customer satisfaction in that regulatory space, which is the other thing we monitor, has continued to improve slightly up to 72% satisfaction in that space. Moving out of the service performance territory, and by the way, I should say, obviously we're closing in on the annual report period where we will have fulsome reporting to you on service performance, financial performance, and so on. So not wanting to labour too much of that today. Other important achievements, you signed off, or rather endorsed the Auckland Regional Land Transport Plan, and subsequently Auckland Transport Board has done so. So that is concluded. Auckland, in terms of LTP implementation, Auckland Transport is rolling out programs such as the $50 public transport fare cap. So those decisions that you made to direct them are implementing. In terms of water, the second reading of the bill to underpin the changes was this week, and the final bits of advocacy on behalf of council happened into that process to make sure that it met our needs. There is work underway in terms of the Auckland Future Fund establishment, most particularly work on the trust deed, the fund management arrangements, and the recruitment of directors. And there's been liaison with Councillor Fletcher in terms of chairing that panel. So there'll be more information for you shortly, and recommendations in due course for the trustee appointments coming through to Councillor Newman's committee. The establishment of group shared services has come along actually very well, and I'd like to acknowledge Richard Jarrett's leadership in that space, having been appointed the inaugural director of group shared services. And I'm actually going to invite RJ to the table, and he will speak both to that quickly and to the saving that the Mayor foreshadowed in relation to our technology platforms. RJ.
Kia ora tātou. You would have noticed in the pack that we managed to renegotiate a very favourable deal for council with SAP. Just for context, SAP power about 70% of the applications for Auckland Council, which is a significant piece of real estate they have within our environments, which has been somewhat constraining for us if you think about our desire to invest in fit-for-purpose technologies to mobilise group shared services. With their willing cooperation, we've managed to negotiate a deal that takes just over $40 million of benefits out of or savings for council over the next 7 years. But more importantly, it also gives us the optionality to pick and choose what technologies are best for us in the future that come out of the box and not customised. So it's a good step forward. I think that's all I should say on that. Did you want to comment on CrowdStrike as well?
Please, RJ.
So you would have seen on the 19th of July that there was a firm, a US giant called CrowdStrike, that provide cybersecurity services. Very simply, they provide detection that goes into all the devices that you use for organisations. Any that are Windows-based, which is Auckland Council, were affected by their very simple change. They sneezed and the rest of the world caught a cough that had those particular devices. The US regulatory authority are crawling all over them to see what happened and how that would be fixed. But when you've got software as a service, these things can happen, like you notice that teams have outages from time to time. I'm pleased with the way we responded. There's always learnings, but we managed to get the right areas of council back up and running fast. Emergency management, the contact centre, and our events-based services over the weekend. There's always a learning, but I'm pleased how we responded, and just wanted to give assurance that it wasn't a cyber attack. It was a specific change that CrowdStrike made that caused the outage in the first place.
Thanks, RJ, and my thanks to you and your team for getting that sort of up and running very quickly. Not much in the way of business interruption there at all. So thank you. I'm going to now talk quickly to recovery matters, noting that through a decision you made, I think last month or the month before, we've shifted from a monthly at this meeting rhythm for the Recovery Office to report into you to something a little bit less frequently. But I think it's important that I continue to give you a sense of progress in that space. The first thing to acknowledge is that Cabinet did approve our requested changes to the Crown funding agreement. This was critical in terms of making sure that the Crown contribution, which was in total $877 million, was safe, even though we needed to redirect some of that funding into different areas. And it was, in really simple terms, it was about the balance between the Category 3 property buyouts and the big pieces of infrastructure investment that might have protected those same properties. And our realisation, frankly, that that process was going to take far too long to deliver an outcome and certainty for some of the affected communities. Those with communities affected by this, Councillor Hills, for example, are hopefully aware of this. So that's happened, and the funding is assured around that change. In terms of categorisation, we're now 2/3 of the way through the properties that opted in. What does that mean? It means that there are, and you'll recall the number originally of 700 odd properties that we'd estimated in that space. So 658 properties identified as category 3, and that breaks down as there being 442 buyout offers out there for sale and purchase transactions, and 153 have now completed that process, and you are now the proud owners of 153 of those damaged properties. That, of course, in turn means that there's quite a bit of work happening in terms of the deconstruction, removal, demolition process around those properties. So hopefully I'm painting a clear picture of quite a bit of acceleration in that space in terms of the numbers that the team is dealing with. It's none of which is meant to deny the reality for some people on the ground that they continue to be frustrated and upset by the situation they're in as we move towards a conclusion for them. Just only a couple more things from me. I did want to mention, while we're in that sort of recovery space, that we did agree, commission if you like, the Office of the Auditor General to do to do a review of all of the actions arising from last year's events to keep us honest and give us an objective, independent view of how well we had implemented all of the recommendations from the different reports last year. So that field work is completed, and I can tell you that we've been told that we can expect a draft report from the Auditor General on the 16th of August, and that it'll be tabled in Parliament, which means that's when it will be public on the 17th of September. I am hopeful, I won't use the word confident, that it'll confirm pretty solid progress against those review recommendations. But I do make the point, and this is an ongoing area of focus, there are still things to work on. I particularly mention sort of the developing capability that we need in terms of communication and public information, our connect with the community and the preparedness at a very local level, so that we've got resilience in the community alongside what we do as an agency in the community. And you noted, I certainly did, comments this morning from the advisory panels that go to a bit of sensitivity and the need for quite targeted work in terms of our disability community, our aged community, and our ethnic communities. So I think it's, I'm pleased with the progress, but I think that we're coming up to an important milestone where we check in and we make sure that we're on track, and we make sure we really understand what requires still to be done in terms of getting the city prepared for another significant event. Your Worship, I'll leave my part there and I will hand to Ross now. Thank you.
Thank you. Good afternoon, everyone. So Phil talked a bit about, touched on at least, the Auckland Future Fund preparatory work. As you recall, in June you made decisions around the Auckland Future Fund and delegated to the Chief Executive to get on with a bunch of preparatory work. And then as part of that, there was also a request to report back at least quarterly. So we will be providing a full update at the next governing body meeting, but there's quite a lot of work underway. So I just wanted to just touch on some of the details, so just so that you're aware of what's going on. So there's quite a significant implementation work program. There's weekly meetings, there's various work streams being set up, lots of legal work, governance work, etc. There's the key bit around the director appointments that's been mentioned, but also in addition to that, there's a lot of work we need to get in place to procure some services, advice, and other bits and pieces to make sure that once the directors are appointed, which we're aiming for the end of August, they'll need to meet and make some key decisions around setting up and running the future fund in September. So we're needing to get things up and running so that the new board, once they're appointed, can hit the ground running. It does create a little bit of a gap in terms of oversight. So we'll have that once the directors are appointed, but in the meantime, we've felt like we needed a bit more expertise. So we're working with Simon Allen, who's, you may recall, was the former chair of Auckland Council Investments Limited, is working with us, and we're working with Councillor Fletcher as the chair of the Investment Workings Group, just to make sure we've got the right kind of oversight as we move through those things. So, some of the activities that are underway includes some procurement processes. So we've gone out with a request for proposal for investment managers. They will be managers that provide advice to the directors. The directors will make all the decisions, and they will make the decisions around who to appoint finally. But we need to get that procurement process underway so that the directors can make an appointment around who they want as their investment advisors to run the fund. We'll also get some advice around the draft SIPO. That's a Statement of Investment Policy and Objectives. It's a key document that governs how the future fund will work. And we're also getting some advice around the transfer of the airport shares and then the process of how those shares might be sold to seed the future fund. So we're getting that advice underway so that all the decisions will be made by the directors. We want to make sure they've got full advice and they've got the expertise that they need in place to hit the ground running. As I said, there'll be a full update on that next month. I just wanted to keep you up to date around how things are tracking. In terms of the financials, so this is normally when I talk about how the results are looking and they'd be in the report. We can't kind of cover all of the details of the reports this month because we've reached the end of the financial year and the results for the year have to be disclosed in a systematic way through the NZX. So that will happen at the end of August and then we'll move to completing the annual report, go through the audit process, and the full annual report will come to the governing body at the end of September and then be released publicly at that point. So up until that point of the NZX release, we do need to keep the results for the year confidential. We have concluded as much as we can in the open report, but there's a separate report in the confidential section today that has those numbers there. They are preliminary and they're unaudited, but they're there for you in the confidential section. In terms of what I can talk about, is I can talk about the general trends. The trends that we've seen in all the previous months up to May basically have continued. Those trends included strong CapEx delivery, and we're looking at for transport and water care 99-98% delivery. So very strong CapEx delivery has occurred throughout the year, and the same is true in June. Couple of highlights from the June in the June month is in Te Atatū South is the T2 transit greening of that lane has been completed and that lane is now live. There were two new electric trains for the CRL have passed their inspection and now logistics are underway to get those shipped to Auckland. So great to have the CRL line and stations built, but we need the trains as well. So we've got the trains coming, which is good news. And then in the water care space, there's the Akarana booster pump station has come on stream, which doubles the water supply capacity in the Hillsborough area. So CapEx delivery continues to be very strong. Capital revenue has been a little slow, so less asset disposals, lower development contributions. Those trends have been constant throughout the year and have been we're seeing delays in some of those things, delays with asset sales and delays with the insurance proceeds. The insurance proceeds from the storm events will now occur next, or in the current financial year rather than the year to June, and we've seen less development contributions as well. In terms of operating budgets, throughout the year we've seen strong operating revenue. So back in May we were, up to that point, tracking 4% ahead of budget. That includes things like strong watercare growth revenues, strong bus patronage, the higher consents. So we had a very strong month in May in terms of building consents, new consents coming through. As Phil said, that's dropped off a little bit in June, but still higher than it was, say, a year ago. And we've also had more government grants come through for storm recovery. So the trend has been strong operating revenue, and then the general trend throughout the year has been operating expenditure close to budget. We've had some higher storm costs throughout the year, but we've had some lower costs elsewhere, repairs and maintenance, and a few other things have been low. So pluses and minuses. But those are the trends that have been in place throughout the year, and June isn't all that different. And as I said, we'll have there is more information in the confidential, and we can talk about that then. You will also get that more in-depth report at the end of August. We'll have the NZX release, but we'll also have the quarterly report for the financials for the June year. So that's when we can provide and a more in-depth look at these numbers as well. Well, I'll pass across to Gary for the economic update.
Thank you, Ross. Kia ora koutou, councillors and chair. New data out over the last month has pointed to a continuing softening in economic activity as higher interest rates dampen consumer spending. For example, stats on retail spending, job advertisements, and surveys of business confidence and hiring intentions. In particular, many of you may have seen the data release on consumer price index. Inflation for Q2 showed that headline inflation for the year to June 2024 decreased from 4% down to 3.3%. That's slightly lower than had been expected, and it's just outside the target band that the Reserve Bank's got of 1 to 3%. In that context has been acknowledged by the Reserve Bank, and its recent monetary policy review indicated its confidence in reaching the target of 3%, the upper band, I should say, upper bound of that band in the latter part of this year. So already commercial banks have started dropping some of their lending rates. They've been sharpening up there in anticipation of OCR cuts, perhaps in the later months of this year rather than next year. Just to turn to the city centre, in response to your request for an update at the last governing body meeting, you'll have seen that the Chief Executive and Group CFO update has a summary with an attachment note that covers the economic data as well as the council activities in the city centre. Just to touch on some of that, I think it does focus on the retail and hospitality side of the city centre, because those businesses do tend to be quite visible at street level and quite sensitive to changes in consumer spending habits. And it's also where we have some of the more timely measures in terms of data on retail spending, data on retail vacancies at a monthly frequency. It also just sort of notes that we have to see the city centre in the broader context of also being an employment centre, particularly for those professional services, banking, finance, insurance, which is really where the employment numbers are dominated. And of course it is also a location for our residences too. But in terms of some of those headline numbers relative to the pre-pandemic period, looking at the most recent data for this year, we can see retail spending is about 20% lower still, has clawed back a little bit, but it's still not where it was in real terms relative to prior to the pandemic. The city centre is not alone in that. We also looked at Albany, Manukau, Takapuna, Ponsonby, and those centres are also down to various degrees relative to their pre-pandemic baseline. The exception appears to be Newmarket, which I think will have benefited from a large mall opening, which wasn't available prior to the pandemic, and it is now, so that would have attracted more business. It appears, though, that the city centre has lost a bit of market share in that spending data as far as we can see relative to other centres. In the year to May 2024, accounted for about 8.1% of retail spending in terms of the regional spend, and that's down from 9.8% in the year to February 2020 at the onset of the pandemic. Vacancy rates are still relatively high at 10%, although that has come off 14% in December 2021. Obviously, you would have seen some references. Pedestrian counts are still about 29% lower. That's heart of the city data relative to pre-pandemic, and also public transport trips are also down about still 17%. Now, in each case, there's been some recovery from the depths of the pandemic period in 2021, but still not quite back there yet. I think it's worth touching on some contributing factors here. Unfortunately, there are several layers to those contributing factors. We're all aware of the pandemic shock and the fact that the city centre was particularly exposed to the loss of international connections and international education, but also those macro trends. So I think there's a good case that the city centre has actually accelerated the uptake of remote working that was already underway prior to the pandemic, as well as the uptake of online retail spending or shopping that was already underway. So those sort of macro trends have been accelerated there. And they offer, of course, flexibility and efficiency, but they do come with some adjustment costs, particularly for the city centre. On top of that, we've got the cyclical factors. We've talked about the economy just now in a contractionary phase. That won't last forever, but of course that dampening consumer spend hits the city centre as it does the region as a whole. And on top of that, we've got local factors. We've heard about some of that earlier today with some of the public works and what that's meant for disruption in some parts of the city centre. And other local factors too. I think there's a case that we've seen competitive forces with the downtown or waterfront part of the city centre, doing quite well in terms of offering premium office and retail offerings, and then other parts of the city centre perhaps have lost out in the short run with that competition. And just to wrap up, I'd say that all of this needs to be seen in perhaps the medium-term context. I think there's a case to think about some of the tailwinds that support the outlook for the city centre. We've had a long-run trend in the New Zealand economy towards a more service-based economy rather than a goods-producing economy, and I think that would support demand for commercial office space. We've also seen that as Auckland has grown as a population, as a region over time, the city centre in the past has grown with it, and so I think there's a case that relationship, as Auckland is projected to still grow, the city centre would grow with it. And then, of course, we've heard about the CRL. The city centre is already the most connected part of Auckland in terms of public transport and other road links as well, and I think that will only improve with the completion of the CRL. Finally, I'll just note that there is quite a pipeline of private sector investment. They obviously see some potential in the city centre, particularly around, you've seen a lot of work either announced or delivered along Albert Street and around some of the other catchments at Midtown and downtown. And so I think the fact that the private sector is investing in the city centre is also a signal of that longer term outlook being a bit more positive. So I'll leave it there and hand back to the Chair. Thank you.
Fair enough, thanks for that. Councillor Sayers has got some questions, so it's Councillor Turner and Councillor Walker.
Yeah, thank you. I might direct them to you, Phil, and you might redirect them, but just listening to both your report and the finance report, it's kind of, there's no real alarm bells that I can pick up, which is an improvement perhaps on earlier years of the Auckland Council. So my question is, do we still carry out the Citizens Insights Monitor? That's where we measure kind of Aucklanders' satisfaction with Auckland Council and Auckland Council's decision making, because that hasn't been trending in the right direction for a while, but listening to the reports and the updates that we're getting here, it'd be interesting to see how that reflects out back into the community and what feedback we get on that. So are those surveys being continued? We've done them for a number of years every quarter, and I don't know, Phil, if you had any comment about how you think the efforts that you've been making here and coming in on targets and budgets and delivering on your objectives might influence that outcome. Realising I think we actually ask those questions across the group rather than just the parent. Would you like to make any comment about that?
Was simply to say, yes, we do still measure it. I have to confess I haven't got that material in front of me, so we can confirm the most recent of those survey results with you after this. We do, I'm pretty sure in our end of year reporting, we will include some material on that public sentiment question. So, look forward to that. But I'll come to you after this with those figures. I would hope, I would like to think that we're influencing them. We're certainly seeing some change in the media analysis favourability stuff. But as we discussed in a different forum yesterday, complex issue, and the ability to differentiate the core council from the CCOs is an interesting one. Yeah. So I will come back to you post this with something specific.
Thanks. You could always ask the guy behind you. Councillor Turner.
Thank you. First for Mr. Chief Executive, the recovery figures, the deconstruction, the demolition of the houses, is that coming out of the recovery budget, or how are we funding the deconstruction of the properties we purchase?
Yes, it's coming out of the recovery budget, but it was not specifically provided for in the agreement with government, which means that it's a council cost rather than a shared cost with central government.
And the other question I had was just on the insurance payout that we expect this financial year. How much was that?
It's around 100 million in total of insurance proceeds, and we've received almost virtually nothing this year, and we expect that to come in this current financial year.
That figure's shrinking. It was, I had it noted here some time ago, we were talking about 130 plus. And I note that Watercare, when they came and talked to us about that extra money that we voted through for them at one stage, they talked about their $80 million worth of insurance payout, which they expected, which I then discovered was in the group payout. So of that, how much is Watercare expecting to get?
I don't have the Watercare number yet. My understanding in the budget, in terms of when we set the annual budget, the budgeted figure was around about 110 million for the group. I think the vast bulk of it is with Watercare. So the actual numbers might be different to the budget, but 110 million is the budget number. We haven't received, we haven't virtually received nothing this year, so it's 110 million budget variance. What we might get is still to be determined.
Do you know how much we asked for? No, okay. I'll ask offline, do I? Thank you.
I apologise, Councillor Turner. I was busy having a side
okay.
with the Mayor.
There's a trend from the income side of things to be shrinking. A bit like the amount of money we're going to get from the land around the CRL. Nevertheless, Councillor Walker, please, read your question.
Commendations on the economic analysis and the like as it goes to the city centre. I've just got some questions though. Given that we've got some substantial projects like the CRL and the various things that are happening across the city centre, is it possible to have a bit of a breakdown? For example, right now, the situation in the Wynyard Quarter is diabolical because of the bridge that should have been repaired and hasn't. So I don't doubt that that area is suffering. Similarly, the upper part of Queen Street is faring worse than further down. That will turn around in part once the CRL comes on, but that's some way ahead. Britomart is a different kind of precinct. Given that it's possible to get data on these different areas, okay, because that's available, it doesn't cost us any money, could we have some reporting on that? And is it possible to relate that reporting to some of the stuff that's going on? Especially my concern around these wastewater, waterworks, Wellesley, Victoria Street and the like that are going to generate further reductions in pedestrian count. And around pedestrian counts, is it possible to have pedestrian count numbers for particular parts of the city? Because that's one of the best indicators for you know, how vibrant the city is in particular parts of the city. And the technology exists for that, and maybe it's already being counted. So a few questions there.
Thank you, councillor, for your questions and your interest. You asked about retail spending. We do hold that for the city centre as a whole and for other centres. In terms of a breakdown into different parts of the city centre, don't hold it now, but if there's strong interest in seeing ongoing reporting, that can be broken down to a sub-city centre level. For example, I know Heart of the City has reported. We don't hold it, but I'm sure we can get access to it. In terms of the pedestrian, the counts, I think we put a chart in their report, and we can break that down further and actually look at Midtown versus downtown.
And Wynyard right now?
I'm not sure about Wynyard, but I guess in theory the Wynyard area we could look at the sort of retail and hospitality, well, mostly hospitality over there, I guess, yeah. But if there's an appetite for that, we are planning to put out a sort of more reader-friendly version of this as an insights paper with a few charts and graphics and things for the public domain as part of our just making information available. So if that's of interest to you, we can look to try and add those elements into that. And we're hoping to get that done at the end of August.
The other further question would be, if it's possible, just link up to events. If I give you one example, we had the World Choir Games. We saw part of that here. There were well over 11,000 people from various locations that came to Auckland. I didn't see scarcely any visibility around that. No banners up Queen Street, didn't see anything anywhere other than the fact that I bumped into people and they brought to my attention where was the publicity. It was pretty disappointing. So having some reporting on that sort of thing would be useful. There's also a relationship with cruise ships. I don't doubt that that particularly goes to the lower part of the city, but you know, just having some numbers so that we've got an idea what's going on, and through us, the public can have an idea what's going on, so we can turn things around.
Thank you, councillor. We in our monthly chief executive and group CFO report, we do include economic stats. They have been at a sort of a macroeconomic level. We can look to include some that are more focused on Auckland and parts of the city centre as you've asked for. And if we've got those available monthly, we'll try and include those for your appraisal.
Thank you very much.
Kia ora.
Thank you very much, Mr. Chair.
Good question, good answers. That's the end of those questions. So there's a recommendation to receive this report and the updates. And beg your pardon? Councillor Fletcher's moved that.
Second.
Seconded by Councillor Walker. Thank you very much. All those in favour, please say aye. To the contrary, carried. I think it just goes how quickly things go when the financial news is improving. Rightio, we've got. We're going to